Good morning to all of you in the Devil Dog Day Trade community. My name is Michael, and I'll be taking you through my setup process for the trading day on today, November 30th, 2021. A special welcome to all of you who have served or are serving in the armed forces. And of course, here we do save the best for last, so an even more special welcome to all my fellow Marines out there. Semper Fi, Jarheads. For those of you joining us for the first time, we are on a journey together here, and we have people from all skills and experience levels. There will be information presented in ways that will resonate with each of the individual levels of understanding and experience. For any areas or comments that I make that don't make sense immediately to you, please don't hesitate to ask a question in the chat box there for clarification. And also remember to subscribe and check back into the channel for additional educational videos that will help build out your individual knowledge and skills. Just a reminder that the feed is delayed by up to 30 seconds on YouTube, so if I don't respond instantly to a chat question, that will be why. I will make sure and monitor chat though to make sure that I capture and cover as many requests as possible. And we do have time towards the end of the show where we focus exclusively on comments. So let's take a look real quick what happened in our last 24 hours. And for events, we jump over to Forex Factory, take a look there. And so let's look back on Monday, and we do see there were a couple of higher impact events. We had the Bank of Canada governor speaking there at 2 p.m. And then we had Fed Chair Powell speaking as well at 3:05. Those did not seem to have any significant impact on the market. And then other than the new COVID-19 variant out there, there doesn't seem to be anything that really is impacting the markets overall. Looking forward to today, what do we have going on here? You can see we did have, just a quick refresher for Forex Factory Calendar 2. The color of the folders here indicates the overall impact to the potential trading markets. We focus only on those that are orange or red, and only on ones for the markets that we trade in. And so we don't look at anything in Canada, so that will be happening at 8:30, where their GDP numbers come in. But then at 10 a.m. we do have a couple of things here going on. First of all, the Fed Chair, Jerome Powell, will be testifying again. We also have our consumer confidence, and then Treasury Secretary Yellen speaking. And at 1 p.m. you'll also see another FOMC member speaking. All of those could potentially impact the market. So at those particular times, just make sure that you're careful with your trades, and that you aren't looking to trade anything on too short of a time frame, since those events can sometimes cause spikes in the market overall. All right, moving on. Look at our agenda. We do look at indexes and correlations first, followed by our Forex market, then onto futures, and then into crypto after that, ETFs and stocks for option plays after that, if we have time. So the first index market we look at here is the DAX, and we don't trade this, so we're just looking to see what was going on with the German market overnight, just to see how it could potentially impact the U.S. markets when they open at 9:30 Eastern Time. And what we do see here is we did get a drop down into this demand zone down here. This is a demand zone on the weekly time frame, so it's a fairly strong one. So we would definitely expect price to be moving back up and out of here. That would be a good indicator for our U.S. markets when they open, that the DAX market did come down into that area. Just looking at on a 1 hour chart, just to see if there's anything specific to look at that could happen during the trading day today. And of course, we're so far low on this particular corrective move that we're not going to see anything down and left on the 60-minute chart. Looking up and left, though, we do see some area here where this could be a potential hang-up for where price, as price moves back up through this area here, and then even in this the upper area right up in here too. Right? So both of these here could be potential impacts, and this is where it gets a little bit tricky, right? We are in, obviously, over the past several days, we're in a bit of a downturn on this overall market. As it's going down, it is creating additional supply zones, which would lend you to think that it's stronger going down. However, we got down to a very strong weekly demand zone, and so this is an area where I would still, take the weekly play if it continues to move up like this. But just know you're probably going to get some movement down here, although I wouldn't expect these to push. These 60-minute demand zones or supply zones aren't necessarily going to push price back down through that weekly zone. So let's move over to our TradeStation platform for the remainder of the securities. We always start with the dollar, since the dollar is recognized as the lead global currency, and it does impact all of the other markets. And we have here markets in the dollar's in a bit of a corrective move from its overall long-term move up. So looking at the daily chart right here, and I'll zoom in on this just so you can see a little bit better. Again, still in this significant move up. We've talked a little bit the last couple of days about this being a relatively decent corrective move down, just in line with the other corrections that we've seen here. And we would expect it price to potentially come all the way back down to this 95 area here. However, as you'll see on like the 240-minute chart, even the 60, there's a couple of other areas where we could potentially turn this back up again. Zoom out just to show you where we are, and looking for anything coming back down. You do see we have these two areas up here at 98.99 and then 99.78. That's really where I would think the price could potentially change for a much longer turn back down again. Looking at again this 240-minute chart, because we are approaching an area here that we had drawn out as a demand zone. Let me zoom in on it so we get a really good look. And we drew this with a zone entry down lower end because the second base candle or second leg out candle here is a much longer one than the initial one here. So that typically means price is going to come back down. However, you can see right here at the top of this, the body of this base candle right here is the true potential entry for this area at 95.64. Almost came down to it there. Price is moving a little bit off of this area, which means there is a fair amount of imbalance here. I would still look for price to continue to come back down in here before I use this as an actual trade taking opportunity in one of our other markets, and particularly the euro. So looking up and left, we do have this same type of a picture here where we've got this leg in candle followed by a base candle, leg out, and then another leg out on the base candle, and then a following leg out candle here. This is it's a very good picture, right? It's one that we would typically look to take. However, it would have to break down past this particular zone first. It has to take out this previous pivot low before we would be interested in taking anything back in this area. If price just comes down here and comes back up, it's going to blow right through those. If price can down further, down past this kind of 95 area, and then comes back up here, that's when we would look to take those areas short. All right, let's look at our 60-minute area, since we did have one here that we thought might be interesting, and this would be a good example of why if the picture isn't perfect, we don't take them right away. And so just looking at this one, so we did have this area here, and there's just a couple of reasons why this wasn't a really good indicator. There wasn't a lot of odds enhancers that we would use to validate this zone. That's why we just put it as an area of interest. Remember, we got the legend up at the top of the screen, which tells you what the different types of lines and colors mean there. A dashed line just means it's an area of interest. We'll look to see if we want to use it, but price has to get into the area first. As you can see, it went right through. So again, looking up and left, we do have these areas here are interesting, but again, this is still in a bigger overall trend up. So I would be hesitant to take any shorts based on where the dollar is right now. So we're gonna leave this one. We're gonna leave this one alone, and still believe that price should continue to move up from here. But we'll take a look at the euro market as well. and that may give us a better indication of what's going on overall here. Okay, let's move on to our VIX. This is a volatility index. And again, starting just on a daily time frame here. And when we looked at this on Sunday, we talked a little bit about, you see this entire candle outside of the upper limit of our Bollinger Band indicators here. It's just a very unusual move. And when we looked at that, we saw, okay, there's a high probability that VIX has to come back down into the actual between the Bollinger Bands. And so we use that to validate some of the long trades that we put on in the index markets. And sure enough, that's what happened. Now, there's still a lot of volatility in the market with this new COVID-19 variant out there, and so that's why it continues to push the volatility up higher than this. But again, our math tells us that this can't maintain itself, right? 95% of all activity happens between two standard deviations of this area. So we're definitely looking for VIX to either fall back in here, or this gap will get wider and wider and wider, which just means that there's additional volatility coming into the market. There isn't any areas that we're interested in looking at and moving up and left here on a daily chart until we get up to the 44 area. So let's look and see if we can find something on a lower time frame. And on a 240-minute chart, again, we just look up and left here, and there's no price action above here, so there's nothing that we can use. I'm looking down and left. There's nothing here that's grabbing my eye, so I won't zoom in on anything. There's just no indication of what price might do here. Let's look back on the 60-minute to see if we can get any indication at all. And again, it's the interest of time, so we get to as many markets as we can. I'm looking at this picture and not seeing anything that I'm interested in here. So just understand that VIX is high right now. Not unusual given what's going on in the world, but no surprise if that would fall a bit and back into more of the standard stable range. Moving on to our Forex markets. So this is our Euro USD pair, and this mimics the Euro future as well, which again is the opposite correlation market with the dollar. Jumping over to our daily time frame, which we'll start at, and again, just a reminder, we do have this area up above. This correlates with the areas that we looked at on the dollar as well. So when price comes into this area, if the price is also within those demand zones for the dollar, then this will be a fantastic trade to take. And we are watching and waiting for price to get up to this area here. On a 240-minute chart, just a quick reminder, we did take this trade last week, and that one worked. We did not expect that price is going to work again here, so it would not surprise me at all that price continues to go back up through here. Now, you do have an interesting area right here, and right, so we've got this picture perfect zone that we've talked about in the past, and we'll do an additional session on to really do a deep dive into it, into exactly what it looks like and how to make use of it. But we do have this picture right here. So if price goes up through this zone here, breaks this, both of this pivot high here and this whole entire zone, and then comes back down in here, then this turns into a very, very, very strong zone. So just keep an eye on that, and watch for that to happen. If price comes back up into close to this 1.14 area and then comes back down, this turns into a very strong zone. And then on a 60-minute chart, we're just looking again for anything additional. We're coming back up into the area just like we had on the 240-minute chart, where it's a previously used zone. That's what the dotted lines mean here. And again, we've got a couple of indicators where price could potentially do a short-term trade continuing on this correction up, and so I'll draw these ones out. These would be, they'd have to happen very quickly. These would be quick retracements. Price comes back down here quickly and then keeps moving up before it hits one of our other bigger zones, supply zones above here on the 240 or even the daily time frame. But this right here, if you look left, right, you can see it took out this previous pivot high, so that's a good odds enhancer that this could be potentially a powerful zone. Okay, we're going to go over to our Japanese yen, US dollar, Japanese yen pair. And just starting on the daily time frame. And remember, this is one that is correlated with the dollar. So in this pair, the dollar is the first currency. So it moves in direct relationship with the dollar itself. So when you see, a demand zone line up here with the dollar, that's when you know it's a very, very strong zone. And we've got stuff that's very far down here. This would take even if price moves as fast as it has the last couple of days, it'll still take a couple of days to get down to this area here. So let's go see if we got anything better on a smaller time frame to look at. And 240-minute chart, again, I'm just quickly looking up and left. There's nothing that jumps out at me. Down and left, we still have this area at 112.226. Just to make sure we get a good view of this. This is another very strong area. Again, as long as we're not coming into this area from a higher time frame zone, again, this will be a very, very strong one to take. It actually gets us out of our white space area here, right? This is all white space where prices just moved, back and forth, back and forth, back and forth over. So it's very, very, very strong indicator that this zone here could work for a longer move up. Okay, let's move into our currencies, our futures now, and we're going to go to oil, crude oil. Crude oil has been very, very volatile the last few days, and just don't normally look at weekly zones during the week. We should save those for Monday sessions. However, because of the impact of this one, we will take a look here, and we had originally drawn this zone out, right? It looked very, very strong, and actually, while it's hard to see this on the weekly chart because the entire candle is taken up here, these two candles split the week. So when we got into this trade on Friday, it did work fairly well, right? It went almost a 2-to-1 up here, and it now has come back down through. So I would consider, continue looking at this as just oil is still weak, and we're not going to jump on any long-term long positions where we buy into this anytime soon until we see validation that price has actually changed direction here. So this will end up being, this is a blue because this was a break-even trade. We didn't get that big longer-term push up like we were expecting we would. Sorry, I forgot to unminimize that. So on a daily time frame, is there anything down here that we're looking at that we could potentially use? And the answer is not for a long time. So again, we're not going to, what a lot of people say is we're not going to try and catch the falling knife, right? The oil is still dropping. Let's let it drop until it hits, an area where we can prove that it's turning around on a smaller time frame, and then look to get back in on some longs there. So just looking at where we could potentially continue taking this further down. Now, I would just caution against that. Right, price is very, very, very far down now. So when you get down this low in the overall context, you have to be very careful of taking additional short positions. We do have, just in almost every single chart, we do have this negative divergence on RSI. You can see here, right, it's a perfect example of that. Right, price is continuing to move down here. Let me zoom in on this so we can see it a little bit better. Price is moving down here, but very clear that RSI is moving up. So we want to be just very, very careful about continuing to take shorts in here as well when you get this far down in the overall context. And I'm looking at these charts just kind of with my, the way that I view them, and I'm not seeing anything that jumps out at me of that would be worth taking right now. So we'll just stay away from oil for the next day or two until we get that stabilizing low set, and then we'll come back to it. Gold. So one of the we've talked about this a little bit before of gold being very volatile, especially at lower time frames. And you can see here up here in the 15-minute and the 2-minute chart, price looks like it's just kind of bouncing all over the place. Almost looks like Morse code in this area. That typically means that gold is about ready to do a rollover event. It's going to roll over to the new contract, and so the old contract is becoming more and more sparse. And sparsely traded, and so that's just a note. Just be cautious when you see activity like that, and just know that you need to move on to the next contract in the futures markets. So let's start with our daily time frame here, and I will zoom in on this to get a good picture of this. And we're still stuck in the middle of all of this stuff right here. There's nothing down below that's close that we like. And coming up again, we already have this area here that has been used. And I'm actually going to change this to a dotted line. Now that's been used, so we're not going to use that one again. So really nothing on the high time frames that we can use at all. Going down to our 240-minute time frame, we have these areas here that are of interest to us, but again, not fully defined zones. And so we're looking if price comes down into these areas, and then we can look on a lower time frame and see validation that price is going to correct or going to change direction here. Then we would potentially get on a trade here. But these are areas of interest only, nothing to take right off the bat. And as we look up and left, these areas are just messy, so we don't want to take any additional risk there. Looking at a 60-minute time frame just to see what else we've got, and we had this particular potential trade right up here that honestly worked. We just didn't have the right entry point set. You'll see here that I had my entry set at 1816.5. Price came all the way up to this candle 1816.3. So we missed that trade by 2 ticks of the price point. It has moved down far enough down here where we are not interested in trying to take this. Again, we're going to consider this zone used, and we just missed the entry point. That'll go into our documentation metrics, and we will evaluate that after a certain amount of trades have taken place to see if we need to change our entry points for gold based on additional information like this. All right. Again, I'm not going to look at anything on the 15-minute chart because this is not worth trading in, right? This is very much too sporadic. Let's go to natural gas. We had that significant drop over the weekend there in natural gas. And so let's see if we hit anything that we're interested in. And what we see here is just we talked about this a little bit on Sunday maybe, where you've got this general overall down move, right? So you've got price just, right, it's right between these two channels here. I mean, really. It's continuing to follow this. Now what this can sometimes mean though is that this is setting up for a bigger move up. So we would look for, do we have any good daily zones that we want to use that are below this whole area here? And unfortunately, we really don't. This one right here would be about the closest thing that I would put in as a potential area, but it's not very strong. Let's go ahead and mark it. We'll track this one just to see again if price comes into this area and you get validation on a lower time frame that it's going to move. then that one could potentially be the one that that makes it come back up for us. We're so far below anything else, I'm not going to look on any of these areas, time frames to continue or to look for moves up. I will on a 60-minute chart here, because we did break through this, huge white space area here. I want to see if there's anything that I'm interested in getting back short on. As I'm looking up and left, it's just too messy. There isn't anything that jumps out at me here. All right. So that's it for natural gas. Let's move on to the Nikkei index. So this is the Japanese markets. Again, we use these both as index or in a correlation market. Also, we do trade the Nikkei as well. And this is just, again, gives you a good indication of what happens there overnight. Can sometimes give you a quick peek into what's going to happen in the U.S. markets when they open. And as you can see, we did have this, significant move down overnight. And we didn't quite get this entry on the daily chart up here. Just missed it again. Price came very, very close to making this entry and did not get it. And as I look down and left, we have this previously used area here that, again, we're not going to take again. And there isn't anything else below it on the daily chart. So got nothing there that's going to indicate any price is going to turn anytime soon. So let's, again, we're not going to try and look for longs since we have nothing even on the daily chart. So we're not looking any lower than that. Looking down for additional short positions, nothing showing up on the 240-minute chart. Let me look on a 60-minute chart to see if there's anything here that we would be interested in. And nothing is jumping out at me. Like there's nothing here that really meets a good, strong sight picture for these zones. All right, moving on to our bonds. So we did send a note out to the community looking at a 240-minute time area on the 10-year bond. So I'm going to pull this one up first. I had thought that with the overall move down and the index market showing some additional strength yesterday coming out of those daily zones, that this area here would have been a strong one to take a longer term position on. As it turned out, that was not the case. This one did not work for us. So we'll be putting that in our tracking sheet, but marking it here did not work. And so what that does show us, though, is that bonds are much stronger than what we were thinking of. And they are coming out of an additional daily demand zone as well, so that's not too unexpected there. And so instead of looking for additional shorts here on the lower time frames, we will be looking for long positions. There's nothing here that's jumping out at me on the 240-minute time frame. And I now have our TradeStation bug, which sometimes the minimize and maximize buttons on TradeStation bug out, and you're not able to minimize and maximize the individual windows until you go through this little dance of resetting it. That's what I'm doing now. There we go. Okay, so so just back to the daily time frame just to show you where we're coming from. And actually we do have a potential daily area that we're actually coming into right now. We're coming out of this daily zone right here. This is now used. This was a very, very strong zone that we had additional correlation in both from the 10-year into the 30-year bonds as well. So that's why we knew that this one was going to work. This trade worked out very, very well. We targeted out after a 4-to-1 profit ratio on this one, and price is continuing to move up. Now we've got, I'm going to change the color on this so that you guys can see this a little better. We've got a couple indications here of why this might be the area where price is going to turn at. And one is we are approaching outside the Bollinger Band here, so 2 standard deviations. So remember, most of our activity happens between these bands. So when you get outside of those into a defined zone, that's another good indication that price could potentially change direction here. We're also getting outside of this area here, this balanced area where price has just been going back and forth in, and getting outside of that as well. So we'll take a look at when we get to our 30-year bonds, take a look at there. If we find a correlating zone there, then that would be a good solid indication that this trade is going to work for us. And if this one does work, this will be the bigger move that will take us down past, continue this overall downtrend that started, back in August. So just looking down the 60-minute time frame here to see if there's anything that's going to jump out at us as far as we can take. Obviously, we're not looking up and left since we don't have a daily zone there. We're not worrying about 60-minute zones in this area. And as I look down and left here, nothing jumps out at me to get back long in, especially with that daily zone sitting right on top of us here. So while that's still fresh, let's look at our 30-year bonds, because I want to see if we can find that same view in the 30-year bonds to give us that either additional confirmation that this is going to work or an indication that it could just blow right through that additional daily zone. And I've got nothing showing up here that we had previously done before. So just again, looking up and left, did we miss anything? And no, we didn't. So we don't have any additional correlation that 10-year bond trade is going to work. So if you are thinking about that, I would just look for confirmation at lower time frame, maybe like a 60-minute one. Look for negative divergence on our RSI. If you see that, then that would be a good indicator to take that trade. I'm looking at the 240-minute chart here since that's the one that's bugged for today. I don't want to keep opening that one up and wasting our time going back and forth through it. So just looking down here, there's nothing interesting in the 240-minute chart for the 30-year bonds. And let me look on a 60-minute time frame. So this is the other one that we were talking about, right, where we had price come right down into this area here. This was the same area on the 10-year bonds. We also had the negative divergence where we had price going lower, but RSI down here on our bottom chart moving up. So it was a really good way to take that. As you can see, we targeted out right here at the 4-to-1, and price just kept going and going and going from there, though. So, once we get a little bit better practice at this, we'll understand more when to take some of those longer-term trades. Moving up and get additional profit off of them. Where can we get back in on this if price continues to go up? Right, and there's just nothing here that is solid enough that I would be interested in. So we won't spend any more time here. We've got that the 1 daily zone on our TY, our 10-year bonds. If that one works, then we've got a good indication that price is going to come back down on both of these markets. Okay, moving on to our index markets now in the futures area. Let's go to S&P 500 first, and you'll see this same picture on both the S&P 500 and the Nasdaq, where we had areas that we were interested in on the daily chart that weren't rock solid, but because they were in the same spot on 2 different index markets, that was a good indication that these might work. And so as you see, price came down in this area, did turn around and come back up. There was another 60-minute demand zone embedded within this bigger daily demand zone. That was a really good entry point for this trade. And we did send a note out to yesterday that we were looking at a very specific level on this to break, to understand whether this was going to continue up or whether it was going to fall back down. And let me just show that to you on the 15-minute chart real quick of why that area was important. We had said it was a 46.65. So it was basically this line right here. I'll actually draw a line here for you. Right. This area here, we needed this to break and then continue a stronger move up, and what happened was it did not, right? It's hung in here This is that, it wasn't an actual zone, just a good solid line of resistance of price not getting through there. And sure enough, when we didn't break that, we had that drop back down, which was expected. We needed that to break. You'll see here I did during the day yesterday, I was tracking this and did draw this particular zone out here. Was just seeing if I could catch this, move back up again. And again, price came down in here. It moved right out of it, but right back into that same area, and just couldn't keep going. So we knew at that point, when price couldn't get above there right away, yeah, close this trade out. It's not gonna keep moving for you. We'll mark that one out. All right, so what's going to happen today? That's a really, really good question. So let's take a look at our 200. We have to look at this chart, even though it's bugged. I'll get through this quickly. So what we have here is the negative almost the negative divergence, right? Price didn't quite come back down below this low here. It came down to it, couldn't quite break it. But you look on our RSI chart here, you are still seeing that negative divergence. So potential indication, right, from right here that price is going to continue to move up, but it's not a strong one. I would not take any additional trades on this right now. We are still looking at that previous area that we had talked about before, that 46.65. If price can break up through there, jump in on longs, all day. If it doesn't, look for that price to continue down to that next area of demand that we have on the daily chart. So let me get back into, okay, 60-minute time frame. You'll see we just price did come right down and hit this 60-minute zone that was embedded in that daily one. And so this is previously used. If I'm looking up and left here, I'm not seeing any good solid formations of supply that would prevent this from moving back up. So I still think that there's a fairly good indication that we're going to break through this 46.65 area here and continue this push up. But it has to do so before you use that information to make any actual decisions on. But there isn't anything else here that I would take during this time frame. So just real quick, back over to our 15-minute chart just to see, is there anything else here that we would look at on a, again, I'm not going to get back in on any longs on this until we break this area right here. Then I would look for something over here that had another good demand zone for us. And I don't see anything up and left here that's strong enough that I would jump back in on another short that would tell me that this area here did actually create some level of supply that I had to be worried about. So let's look at Nasdaq just to see if we get that same type of a picture here, and pull up in the daily chart because we let it load. There we go. Okay, so we finally got that. If you saw the the video from Sunday, you saw that huge bug in the daily chart in the Nasdaq where we had that 17,000 point green candle going all the way down. But you'll see here, so we had the same area of interest on the daily chart. The reason why we thought that was worth taking is because it was in the same area for both of the index markets. And as you see, the Nasdaq reacted even stronger to this and has moved back up significantly there. So you knew this was a very strong area. Looking up and left, there's nothing else here on the daily time frame where we would be interested in and taking anything short at. And let's see, I don't think nothing on the 240-minute chart worth looking at right now. So let's go down to the 60-minute because this will give us another better indication of what direction this is going to go. As you can see, this area here is our back and forth, right? Prices going back and forth, so this is white space. So we're looking for something for the price to get out of this area. Since we're looking at additional longs, I go down and left first, and there's nothing here that I'm interested in retaking. I would just wait and see if it breaks this area. I think on the Nasdaq we called it about 16,500, somewhere in there, and we haven't gotten to it yet. But it has to break that area before we would continue to get on any additional long positions. Looking up and left to see, is it worth getting on a short even this high in the overall context? And the answer is no. There is nothing good, solid to get into on here, and we typically don't want to take shorts on the index markets anyways. So I'll take a look at this 30-minute chart I put in here. This wasn't the same one from yesterday on the ES. I'm not sure why this one got in there, honestly. So look at our 15-minute chart, right? This will give us a good indication of what we could potentially do during the day today. I don't know why that one was marked either. So bigger picture, we're starting to create another white space area, and I'm going to zoom in on it overall. It's right, a nice white space right here. So again, don't look at anything above or below this. We do have this area here, right? This is all overnight trading. Just as a reminder, this lighter shade of gray box right here, this is the full overnight market. The greenish one here, this is the London market specifically. This just helps us understand when price movements are created, what type of volume that they're dealing with right now. And so always be cautious of any zones created in overnight trading that aren't used in overnight trading. So like right now, the London market is open, but the US market is not. This zone was created without the London market being open, so there's enough volume with the London markets that could potentially completely invalidate this zone. And as you can see here, it was already used, right? Price came just up into here. So if you were trading at 2 a.m., this would have been a nice short-term trade to get into, because it was created and hit in the same type of a market. There's nothing else here that I'm looking at. Again, I need to see this upper area here break before I get in on any additional long positions here. And let's look at RTY. RTY, is our small business index here. This can sometimes show us when there's additional risk in the larger markets. You'll see there is some additional weakness here that wasn't showing up on the other markets, right? We've got a lot. You see prices fallen a lot more in this market than it did the other ones, and that is primarily because the coronavirus and all that, it hits smaller businesses harder than it hits bigger businesses, and so there's just more weakness there. I drew these areas on here yesterday. Just wanted to show this, because one of the things that you'll find that RTY does, and remember this is the Russell 2000 index, is it will sometimes show you indications of a bigger overall market move, whether that's up or down. In this case, as price is coming down, it is creating supply zones above it. Now we would need, all of these lows over here to be broken before we would think about using them. But if all of those get broken, and then you see RTY make a correction to come back up to this area, and if these work when it comes back up in here, that'll be a really good indication that you're looking, there's another drop coming in the other index markets. So we'll monitor this, watch this, and as that unfolds, we'll keep talking about it each day, and you'll get a better understanding of what that means and how to start using some of these markets as indicators just overall of what the bigger global market's going to do there. Yeah, so just don't be confused. These aren't actual zones here. So let me just go ahead and change them in case you're using these as reference points, right? These are just areas where they could turn into zones, and it could be good indicators of bigger overall moves. But as you can see, there's nothing down here to the left. So if this keeps coming down, I'm not expecting price to change anytime soon in RTY. And so again, I'm not going to look any lower on any time frames because we don't even have any daily zones that I'm interested in. However, look at the 60-minute. Is there anything else here that would be a good indication of continuing to get back short on this market? And as I look up and left, it's just not until we get up into this area here. So technically speaking, we have, this is a full zone where you've got your nice strong leg in, 2 base candles. This one here is half leg candle, half base candle. I'll explain how I treat those in just a second. But then a couple of additional leg candles coming out of here. Look left, this new zone did take out this previous pivot low, so some indications there. What I would do here, especially RTY, typically goes deeper into zones than the other indexes do, right? It's a little bit more volatile. And anytime you're shorting an index market, chances are price is going to go deeper into the zone anyways. So I would treat this almost like a leg candle as well and bring my entry point all the way up into here. I would extend my stop market order a bit up. And I'm going to go ahead and draw this one out because I actually like this formation fairly well. So if we do get price coming back up into here, yeah, I think this could potentially be a good solid trade. All right, let's just real quick on the 15-minute chart. Take a look at this. We had drawn this one out a couple of days ago as well. I just want to look to see. So this is one of those ones where you're trying to get back in, on this move down again, and just a good indication of some of the challenges of trading the different time frames that the markets are open. So you've got here the green area. Remember, this is the London market. So London market created this zone, and then the U.S. markets opened, and they just didn't care about it, right? They didn't respect it at all, and it went away. I still, at the time though, I still thought that was a solid enough trade to take. And I mean, it did. It was a break-even trade, so it wasn't a complete loss for us. Okay, looking at current price now. And again, on this low time frame, right, we're in a clear downtrend. We do not want to get back in any long positions on the shorter time frames for RTY. So up and left, there's nothing here. Nothing that I'm interested in any way, shape, or form. Okay. And again, just a quick reminder, I don't typically trade the Dow, so the YM there. If anyone in the community wants to start looking at it, just send us a note and we can add it to here, but I don't use it myself. And so unless there is other interest, we're going to skip it. So let's move on to crypto. We've got 3 of them that we can look at here on TradeStation. So those are the 3 I'm looking at now. Again, if you want to see more and want to see different ones, send us a comment, send us an email, and we will look at those. And if there's enough interest, we'll certainly make the change and add an additional charting platform so we can see more crypto. Bitcoin. So I just want to show this picture here real quick because I was actually talking to a good friend of mine who's a pretty significant Bitcoin miner. And I was talking to him about, what price was going to do when it hit the 70,000 area, and because he's still obviously all in on this, moving up and up and up. And I said, well, you've got on a daily chart here, we've got this price moving up, but if you look down on our RSI chart, you saw here we had this negative divergence. I said, look out, there is a correction coming, and we were literally talking about this on it was on the 9th itself, and sure enough, so we had a pretty decent correction here, right from almost the 70,000 range down to 53. So pretty good correction there. I was actually expecting price to come all the way back down into this 50,000 range here. This is a good solid daily demand zone for us, but there's just so much additional fear in the other markets. Crypto is turning into almost the safe haven, like the hedge. moves against other markets. So as long as there's a volatility and fear in those other markets, your crypto ones are just going to generally go up and take much less well-defined supply and demand zones. But anyways, we have this area down here. So if price gets down to this part, I'd say this would be a good place to get back on that much longer move up again. Let's see if I've got. I won't blow this chart up, but just look on the 240-minute chart. You can zoom in on the video if you can. We do have these areas of interest above. Again, overall, we're still in an uptrend. That's why they are dashed lines, not full lines. It's a great picture, but it's still in an overall uptrend. So this would be a counter trend trade. So just be very, very cautious of those in this time frame. Let's jump down to a 60-minute time frame. You see I've got something up above here that I actually have marked. The reason why is when you get down to these lower time frames, your trend does change, and so we're still in a downtrend. Now, if price goes any lower than this, by the time it gets back up to this area, it may have changed trend. You always have to be careful of that. When you've got zones that you've drawn that are several days away from when you drew them, just be very careful that you reevaluate what the trend is, because you don't want to be making any counter trend trades here without very good reason to. So just keep that in mind, that even though we drew a zone and it looked perfect at one point, it doesn't mean it's as perfect and has the same level of probability later on. So what are we doing here on Bitcoin right now? Honestly, this is all white space for me, right? Price has got to get above or below some of the stuff in order to make any good decisions on. And I don't see any price, any candle structure here that jumps out at me either. So let's just stay away from this for now. Moving on to Ethereum. So Ethereum's a little bit stronger than Bitcoin is right now. So you can see we're coming back up to the same all-time high area again. And the only thing I would be looking for here is if this does go above this area and we get that negative divergence between price action, and then down here on our RSI chart, just look for another correction to be made and just wait for it to come down into a defined zone below that you can look to get back on. But nothing to do there. So as you can see, this is the same formation. Again, I'm not going to blow up the 240-minute chart just because of the that bug. But you can see here we got that same type of formation where it's a really good formation, but you're at the very top of this move. It's a counter trend trade. You've got to be very, very cautious. And you can see price has already gone through the first one here. But let's just take a look at how you could potentially use these areas here for just a second. So we've got 4710 to 4800. So jump down to the 60-minute chart, right? And what I will typically do is just draw this out again, 4710 to 4800. Right? So it's not anywhere in here yet. But what you do is draw that area out on a blank chart, the way that this is, and then watch price as it comes in here. And if it comes in here and it starts moving back down and it sets you up with that negative divergence, look at your RSI indicator, or we're outside the Bollinger Band here as we are. If all of those are in play when price gets to this area, that's how you treat those areas of interest for us. It's how you use other time frames to validate that that's a good area to take. So I'll watch this today as well, and maybe we'll look at it again tomorrow morning and see this is what happened in here. This is either why we would have taken this one or just another proof of why we wouldn't have. So you guys track that as well. I'll track it, and then we can compare notes tomorrow. All right, last one we have here for crypto is Litecoin, and just monitoring chat here to see if anyone has any comments. We've got about 5 minutes left in the session for today. If anyone has any comments, let me know so I can make sure that they are answered for you. Litecoin is much weaker than the other two. Right, it's a much smaller currency, much less volume in this one too. So another thing you just be very cautious of. Make sure you're checking volumes for each one of these before you start trading them. And we do have this area here, and it has worked to some degree so far. Again, this is, we didn't hit all-time highs, which is why this actually drew this one out as a zone, right? It is still technically a counter trend trade, but from a weekly perspective, we were in it was a neutral trend. And so a neutral trend on a weekly, you can sometimes your rules will allow you to take daily trades there. And if you look left, you'll see we had 2, 3, 4 times in the past that price has changed at this level. So those are just other odds enhancers, what we call them, of why that trade could potentially work. And I don't trade this, but just so you know, I still use my rules for anything that I look at, and that's why I drew this zone out and said, look, this is a probable one. Price hasn't moved very strongly out of it, so it may end up not working, but I'm still going to track it and see. Okay, let's look at our 240-minute chart again here. I'm not going to zoom in on it. Take a look. I don't see anything that I'm interested in. On our 60-minute, we just have a good sight picture here that I want to talk a little bit about. You'll see here as we go up and left, I actually draw these zones out because these are actual zones right here. And then the next question you're going to ask is, why are those zones if there's not a base candle or a leg candle coming out of this upper area? The reason why this is a good picture is gaps, depending on what type of a gap they are, can sometimes be treated as a leg candle. And so if you were to fill in the price action here, right, this closed at the top of this base candle here, since it's a green candle, and it opened at the bottom of this green candle here. If you were to draw your own candle in here, that would be a full red candle, which would make this a rally, base, drop, 2 base candles, and 2 other drops here. The reason I say sometimes is this is only you can only use this if the gap is due to price action alone, not due to something like contract rollover in the futures market. And since cryptos don't have contracts, don't have rollover, this just shows that there was a very, very strong move down while the market was closed here. So I would treat this as if there were an actual leg candle in here. So I'm going to go ahead and mark these, and we'll monitor them and see how they perform. All right, I've got a couple of minutes here, so I'm going to look at show you guys a couple of the indexes, the ETFs that I use. I typically don't use any of the ETFs that are direct correlations. Things like SPY, so SPY with the S&P 500, QQQ with the Nasdaq, IWM with the Russell. What I use is ones that are not direct correlations, so I can use them as additional indicators of when something might work. So the best example of that is TLT. Right, so TLT is your 20-year Treasury bond, and why that matters is the futures contracts are 10-year and 30-year. So in reality, what you then have is all 3 of them combined gives you a very, very good picture of overall of where the bond market is going. And so when all 3 of those line up, those are very, very strong zones. So just what we typically do, I start at the daily time frame, and I'll zoom in on something if I see it and it's worth looking at. But you just look at the overall picture here. We've got this area right here, which is fairly strong. And what I do here is when I find these these pictures on this chart just because it's so hard with there being such gaps, since this market's only open, for 7.5 hours or 6.5 hours out of the full day. Then you go look at your 10 and 30-year bonds and futures to see if there's anything there, or if that gap that happened overnight here, did the futures market blow through that and create and not let that be an actual defined zone. But this is a pretty good area here. I'm looking up and left. I'm not seeing anything there. And again, just because of the gaps, you'll find that you can use far fewer time frames. And so what I typically do is I'll go to daily one, and then I'll look at a 60-minute chart. And that's about it for these ETFs. And as I'm looking at this, just generally speaking, you've got a little bit of an area of interest right here. And I'll just zoom over so you can see current price action. This is a pretty reasonable picture perfect zone, where you've got this zone right here with the leg in, base, leg out, and then you've got this area here with your leg in, 3 basing candles, and leg out. So this is a pretty a fairly reasonable one. Now, what you're going to have to be careful of is, where is price at right now in the futures markets? Because this is where it closed yesterday, and I know, so looking at just one of my other platforms on one of my other screens, the futures bond market have gone significantly higher than where they're at, where they closed at yesterday. So this would be one, just be very careful when the market's open in 13 minutes from now. Just be very careful of what happens in here. If price could just blow right through both of these areas. If price opens in these areas, though, that might be a good opportunity to go ahead and take something and get that gap closure. Right, price will open up into a zone, and then it will fall back down and try and close this gap out. That could end up being a very positive trade for you. And that's it for today. Thank you guys very much for your participation, for your support of the show, for your support of the channel. Please make sure you subscribe so you get notifications when additional videos are released. We are working on one that goes through a deeper dive look into how to choose the right broker and the right trading platforms for yourself. I look forward to getting that out to you guys sometimes in the next few days or so. Again, thank you very much for your support. Have a happy and safe trading day, and we'll see you all again at 8:15 Eastern tomorrow.